Good morning, guys. It is Thursday, July 25th, 2024. This Bathrobe business. I'm George Yoganov. I got the coffee and I got the news. So back after I don't think it's been a full week, but it's been a little bit simply because I feel like a lot of the stories this week have been dominated mostly by politics. So that's why there wasn't anything that I felt was worth sharing with you guys. So like I said in previous videos, if I don't feel that there's major stories to talk about in business, I'm just not going to share them. But finally, today I've got actually a number of them internationally, in fact. So let's jump into it in a second. By the way, happy second day of Pie and Beer Day, because I feel like with the weekend, everybody's taking the whole week off. And for those of you not in Utah, I feel sorry for you because we get a second 4th of July, and it's probably even better than the normal 4th of July. If you don't know what that is, you should Google Pioneer Day, and then you'll see what Pie and Beer Day is, and then you'll understand very well. Okay, let's jump into it. So the U.S. economy is growing at a faster pace in the second quarter, much more than expected. This is generally good news. This is actually also coupled with the fact that unemployment claims are actually down as well. So unemployment came in. It's not a major reduction, but it was estimated to be about 235,000. It came in 10,000 less than anticipated. The estimate was going to be about 238,000. So overall, the GDP is growing. Unemployment is down. "Quote unquote inflation is down." I don't know if we believe that. I don't. I think that's BS. But the U.S. economy is doing good. So this is just second quarter growth. It was estimated to grow at about 2.1%, but it actually grew at 2.8. So it's doing actually drastically well. It's also up much more than the first quarter of 2024, which was only 1.6. So overall, economy is going strong. One thing to note, a little bit of a caveat, I will just mention as a side note, it doesn't necessarily affect this, but it kind of does, is mortgage demand is down substantially as home buyers are waiting for lower interest rates. This makes sense. I'm actually in that boat myself. There's no reason to buy if you know that in 2 months you're going to get a discount of something like 20%. Now, well, 20% is probably an exaggeration, but you're going to get a substantial decrease. At least they're going a quarter basis point. We know that. And so why not save money where you can? However, as I've said before, I think that's sort of BS as well, because the second the interest rate drops and the market opens up, everyone who's selling a house is going to go, "Oh, okay, the market is cheaper as far as financing. That means I can up my price, or I don't need to discount my price where I normally would." So I think all in all, that's a wash. I don't think there's much benefit that's coming to home buyers unless there's major cuts progressively. But we're not going to see the result of that for months if they decide to do that. This is mostly for Wall Street. It's nothing more than a play for Wall Street. So that's that. That's the economy. Let's jump into Tesla real quick because I think there's a lot of interesting stuff happening over there. So let's start with this story first. So Tesla wants to invest. I should say Elon Musk wants Tesla to invest $5 billion in its newest startup, XAI, if shareholders approve. So that's pretty much the entire story on its face value. So why he's doing this is not a surprise, simply because Tesla is doing horrible. So Tesla's profit margins are getting hammered by EV discounts and hefty AI spending. So this story is talking about the fact that the AI spending is actually dampening the profit margins of Tesla. But in reality, it's the fact that the cars just aren't selling. EVs are being heavily discounted. For those that do know, my brother actually has a car YouTube channel. He does fantastic work, Shwazy. I recommend you check it out. He's had a lot of great content about how inexpensive EVs are right now, how you can get leases of like $200 a month. Maybe it's not a lease, maybe it's a purchase, but for sure you can get a car for about $250 a month. It's an EV. And it's just across the board. EVs are just not selling. There's a massive supply of them in the market, and Tesla is suffering because of that. In addition, I think he is overstretching his capabilities a little bit in trying to run too many companies. I think that's just a personal point. But one of the reasons he's getting away with this is Elon Musk has always pitched that his company is not a car manufacturer, but a technology company. So it makes sense that a technology company would invest in AI. So for in the mind of Elon Musk, Tesla isn't necessarily a car company. It's like Apple. Apple has phones, Apple has computers, Apple has the Oculus thing, whatever it's called. They have multiple products. So in Musk's mind, this is just another product that Tesla offers. We'll see if it works. Honestly, I think this is a bit, well, I don't think it's a bit. I think it's entirely a maneuver to raise stock price, because there's no question that if your company is AI anything right now, your stock is going up. That's just inflating the market. There's no question that if you compare the Russell 2000 to the S&P to the NASDAQ, it's a huge disparity, because many of the Russell 2000s don't have AI companies. And you're going to see massive growth in anything that says AI. So he's trying to capitalize it in order to rescue his company from the fact that the manufacturing is falling apart. I think most AI, honestly, is just a ploy. It's just a con job by tech. The same way crypto was a few years ago, the same way that the metaverse was. These companies aren't producing real tangible products, real tangible growth. And because of that, they just jump on the next hottest trend, exploit it so that the market reacts and they get major investment. And then after that, they move on to the next thing, because it's literally just a trend pump and dump. It's whatever's in fashion. I feel like in a lot of ways, that's what Wall Street has become, which is why I often support high interest rates, because it makes them focus on fundamentals and not BS like this. So that's all I'll say on Tesla. Let's move on really quickly to, and actually I'll mention just in passing, Alphabet also had major a major quarter. It was up 14% over the year, driven by search and cloud, blah, blah, blah. I'm not going to focus too much on that story. That's just in passing. Now, I'm going to break a little bit with my normal tradition and talk about India a little bit. I know I try to focus this channel mostly on U.S. business, specifically Utah, whenever I can find it. But we're going to focus specifically. I'm going to mention India here in passing, just because of their growth rate compared to ours. I just thought it was worth mentioning so that people understand the difference. So India is having a problem with growth. Now, why I find that funny is their target was 7.2%. But they're only expected to grow about 6.5 to 7%. I think that's actually pretty funny that we're over here fighting over 2.3, 2.1%, whereas over here they're having 7% growth. Now, that's a simplified story. This is mainly because of infrastructure spending. They're trying to become a modernized country by 2047. So they're doing major infrastructure, major road construction, plumbing, all of that stuff, which is great. But I will say that here in the United States, we need a lot of the same. So just that in passing. Last story I'm going to talk about is actually my headline story, which it might not seem like it is. So let's jump into this story. So Southwest is changing the way they're running business. So transformational change at Southwest Airlines it's doing away with the open seating. It's going to be shifting into a tiered model, just like every other airline, where you'll have economy plus and premium seating, et cetera, et cetera. This story is interesting for a number of reasons. If you've been following the market, it is mainly because of activist investors. They have activist investors on their board, and they are pushing them hard to boost sales, revenue, et cetera. This is actually one of the ideas of the activist board. I don't recall the firm that is spearheading this. I don't even remember reading it, honestly. I just know that there is one putting pressure on them. But this was one of their ideas, that every other airline is doing it. You're no longer the discount airline. You need to be doing this as well. And it's true that this leads to major revenue for the company. One of the reasons I have a problem, I'm going to put my little communist hat on, is because this is just another financialized model that we see so much of nowadays. It seems like we just have a lack of innovation, a lack of growth, a lack of substantial change. It seems that the only pathway in capitalism, in wealth creation, is just to financialize whatever products you have, maximize the amount of revenue you gain, and no real innovation or change in production. This is why it kind of bothers me, even though I'm a capitalist. I mean, I run a business, I have a business podcast, but this is one of those criticisms of capitalism that I think are very powerful and very true, is that over time there isn't much innovation, that this is just becomes financialization, and how much can you upsell on any individual product and try to squeeze out every dollar instead of innovating, creating better products, better experiences. It troubles me because I think this is an overall trend for the market, and I have some predictions of what is going to happen here. I think they are going to cut interest rates, and I think with the Trump presidency, they're going to keep cutting interest rates. I think there's a lot of pressure there. Uh, I I mean, I guess we don't have a crystal ball, but I'm putting my money on the fact that Trump wins after everything we've seen in the last couple months. And Trump has been vocal about the fact that he wants low interest rates. He's in business and makes sense. However, that's also terrible because it's going to lead to more financialization. It's going to lead to more money printing. But I think this is just going to be the trend in the system, is that everybody's just going to keep financializing layer upon layer. And this is the result. It's no real innovation, right? Southwest isn't opening up new routes. They're not opening up new airports. They're just going to take what they already have and just subdivide it and charge people more, and people are going to pay it. A lot of people think that's a good idea. That's good, and I don't pass judgment on it in the fact of good or bad. I just think it's worse than if we were to have actual valuable increase in products and services. That's what I would like to say on that fact. That's pretty much it. That's the last story of the day. I'll see you guys tomorrow, and I hope you have a productive day.